following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon, 877-927-6648. Love to hear from you. And fascinating, when I was doing Larry's show, Larry will be back tomorrow. When I was doing Larry's show just an hour ago, I was talking about that there's probably going to have to be an extraneous event, something that really takes the market down, because the earnings so far have been pretty darn good in the semiconductors, as I said, in the high techs. So we saw that sudden plunge, and let me show you something very interesting here. Here's a 10-minute chart. E-mini made a right arm extension, rogue wave moved to the upside to the 2416.75 level, just underneath the 2417.75 all-time high. And then, so I still don't know what happened, but there was a sudden plunge, and it went from the 2416s down to 2409. Sorry, now it's at 2409. It went down to 2402.75, and now it's at 2409. And I think that the little bounce is almost done, at least for now. We're going to be looking at this very closely, and I'll tell you why. I'll do this as we go through the numbers, but in the E-mini down $1.25, it hit exactly the 2402.40. This is not based on the futures at 25-cent increments. So it hit that level exactly. The 9-period exponential moving average had a bounce, but what it's done is it's set in place a magnet at the 2402 level. So bounces are going to have to move very far away. You're going to have to really get to 2422 to be able to repel, to reverse the magnet. You know, when you have a magnet to metal, if you turn it one way, it attracts. If you turn it the other way, it repels. And this is the repelling. And we're going to be having a look at this. And what's really important is that the 120-minute chart, which looked really weak yesterday, just relative to the high-level consolidation, started to look as if it wanted to test the 2417.75 all-time high, and then it suddenly reversed, and now we're looking at something really fascinating, and I'll explain it as we go along. I just wanted to show you that the E-minis still show some residual strength, but the MACD is very weak, stochastic's very weak. I'm not sure that this rebound is the real thing. I think the real thing was the slide, and it's setting in place a bunch of things. Here we go. Let me go through this one at a time. The Dow, INDU, because this is the first time we're kind of back in the den and full speed. I don't want to take too much time here other than to say, let me get rid of the 120-minute chart. Let's go backwards. This is the end of the month. May so far has not gone above 21,169. This is the 13th week of the consolidation since March the 1st. To think that a powerful move like this could not just squeak 80 points higher, 60 points higher, to get to a new all-time high is starting to show that the Dow itself, the mechanism, the makeup, is such that there is a divergence between strong and weak. For instance, Microsoft almost at highs, and some of the other Dow stocks really pulling back quite sharply, like an ExxonMobil. So within this context, what I'm really looking at is this weekly chart. And remember, I drew this template pattern, the schematic way back, and I said there's a U-shaped pattern. If the U doesn't break to a new high, we could get a second U pattern. And that's exactly what we've got. And my suspicion is that it's going to fail. In June, we're going to go sideways to slightly down in the Dow, okay? All of this is contingent upon no new high above 21,112 this week. That includes today, tomorrow, and Friday. Because if it does that, then all of a sudden you've got your leg D what I call a gray D underneath the previous 21,169 all-time high, and it could still fail, but it does make that 21,169 some kind of a magnet. At this point, it's still a repellent. And my suspicion is that the stochastic, I spoke about this earlier, I'll do this again. This is what I call, I have these nicknames. I like the nicknames. My subscribers and folks who've studied the Chapman Wave methodology kind of enjoy those nicknames because it just sums up very quickly in two words or one sentence what we're looking at. And this is like the right shoulder of a double camel hump. You know, some camels have two humps. And what happens is that you've got this completed one right here, and now you've got this retracement failure mode, and this one should fail. So the stochastic is strong at 90%. I would not be surprised if it starts to come back and you go to 87% in a few days, and then you go down under 80% as this becomes a failure pattern. That's kind of what I'm thinking. To do that, you need to have bad news filter into the market, or at least the perception of news that's bad, and you need to have the VIX index rallying, and you need to have bonds moving much higher. So now we can go on. So parameters are 21,120 kind of opens up the chance to retest the all-time high. Failing here, the low today so far is 20,942. Took out the 9-period moving average, now nicely above it. But the trend line resistance right here, where we are at this very moment, 21,000, this is going to be very important. My suspicion is that we actually close below 21,000 today. We'll see what happens. So that's the Dow. Now we can go quicker. S&P, SPX.X. You got the S&P hit the 2403 level. That's a 9-period exponential moving average. I think it's beginning to weaken. We'll watch it. It's the same story in the weekly chart. Monthly chart is in leg D. I always get a little nervous when we're in D in any pattern, because at D, other things can happen in the Chapman Wave methodology. Remember, in the Chapman Wave methodology, what we're looking for, if I can just get to this, is that you identify the lowest, most obvious low bar. Then you merely count each successively higher peak, alphabetizing them, uppercase on the way up, A, B, C, D, fourth highest peak at D is where other things can happen. Could go to E, F, and G. Could even recycle. This is where the yellow light goes on. This is when you lift your foot off the accelerator, hover over the brake, and see what happens. That's exactly where we are. Now, let's go on. So S&P, make it real clear. A close below 2,400 this week is short-term negative. I wouldn't say very negative. It's short-term negative, and a close above 24.22 really opens the upside. I don't think that's going to happen, but we'll see. Let's go to the QQQ. The QQQ, I think this is going to be a leg G. I believe this is going to be the 5, Chapman Wave 5 right here. I'm moving it to the right. We'll see. Days young. But Amazon is the clue. Excuse me. It's funny how this is the only time I sneeze, right here. And when we go into the sun, the Chapman sneeze when they go out into the sun. It's a little reflex action with the eyes. It's a known syndrome. So what we're looking at here, the QQQ at 141.03, a close in the next 3 days under 140, says 139.40 will be the next really important support. Amazon had a round number open to 1,000. It had a round number of 995 the day before its high of yesterday at 1,001.20. I'm making it clear. A close above 1,000 at this particular point becomes quite bullish for Amazon. Any close that can't go above 1,000 in the next 3 to 5 days says you've got a short-term top in Amazon. I'm calling it. We'll see. I'll be back. Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So this is what I'm looking at. So Amazon at 991.75 needs to close above 1,000. And that says, you know what? I'm sorry, I didn't mean that. I mean 1,001.20 needs to close above the all-time high. It can go once above it. It probably shouldn't close above it. Should go once if there is any further strength. But I would not be surprised if it's starting some kind of a consolidation here. It's a spectacular looking stock. It needs a little breather. It's had a wonderful move. Okay, let's get back. So that was the QQQ that I did. Now let's go to the IWM. IWM has been the weakest, still is the weakest, down 95 cents, 135.51. We continue to be short this IWM as well as the Dow, and we've got other positions. But at this particular point, my thinking here is that if you don't get the small cap 2,000 to start moving higher within the next week, it's going to drag some of the others down. And I went through 50 of the NDX, the IBD top 50 stocks, and tell you the truth, almost to a chart, there were maybe 5 that the monthlies were still only in B or something like that, and was really exciting. They had really strong patterns, but the majority had shown an upside move that was suggesting the weekly charts were really close to some kind of a digestive phase. So I'm looking at this, I'm saying I think the upside is limited. You might be able to hold quite nicely here, but I think that the upside is limited. This is the way I'm looking at it at this particular point. Okay, now let's go to gold. Gold is up 4.5 at 1270.3. I had a call early on when Larry showed it was William from Singapore. We were looking at it together. He actually had a put position. I said, you got to watch it closely. But if you get to 1269, it was at 1265. To get to 1269, be a little careful because that says that the dollar's pulling back, that gold is holding well. It's not doing fantastically, in the sense that the MACD and stochastic, the moving averages, are actually doing beautifully. It should be a lot. I think it should be a lot higher. The gold should really be at 1282. This is my assessment right now. But it is acting quite well. And 1270, let me just double check to see if I'm, 1270 is right. It should be doing better. That's all I'm saying. And certainly the gold stocks, I've done this. I went to GG, one of the really good gold stocks. This is a Gold Core, trading at 1360. It's down a penny. I love to go to ASA. It seems to me to be a really good bellwether. It's at 1183, up 3 cents. ASA is a gold companies, South African companies, but I think they're based in Bermuda or something like that. I don't see it. I want gold stocks to be moving. I want the GDX to be moving more than gold. And gold is moving and they're not. And that says to me, this is just a bounce. And it's strange that it's a bounce because, look, the dollar is down 21 cents at 97.02. It looks to me like the Dow is very anxious to retest the low of 96.80, 96.80 lows back on the 22nd and 23rd of May. Looks to me like it wants to test that. Okay, so dollar is not looking well, too good. The euro-dollar currency pair looks like it wants to break out above that peak E that was made on the 23rd of May. And that was at 1.12678. 678, huh? And it looks to me like it wants to break out above it. And if it does it this week, that extends leg C. If it does it next week, it goes to leg D. My target is the high of the 11th of November, the week of the 11th of November, of 1.12989. And the USD JPY, that's the currency pair, Japanese yen dollar currency pair, is weak. It looks to me like it wants to go down to the 110 level. It's at 110.67. All right. So there's the H pattern that we were looking at. If you look at crude oil, that H pattern becomes a lowercase m pattern. And crude oil right now down $1.74, ugly. And made a peak D, repelled at the 200-period exponential moving average in leg D. Remember what we were looking for? Chapman wave, you look for D to start giving you clues. And look what's happened. The weekly chart repelled at the 9-period moving average. And there's the lowercase h that goes to a lowercase m. It could even be one large arch formation. Suggests to me that crude oil is vulnerable. And the questions I had, I think crude oil could go quite a bit lower. And it should be helping the XAL. Let's see where the XAL is, which is the ARCA airline index. Oh, no. It's down 86 cents at 112.48. See, this is the reason why I think that what we're looking at here is very selective strength. And that very selective strength is going to start to wane this week. It started to show signs last week, started to show signs yesterday. And my guess is that through looking at Amazon and many of the others, by next week, we should see some tilts to the downside in these amazing XXX, NDX 100, QQQ, NDX 100, power shares, the XLK. Remember, I like to talk about the XLK when we're looking at a potential top. I drew in the pattern, the template that I'm expecting, a pullback, a bounce, and a further pullback with lower lows and lower highs coming over the next week and a half to 2 weeks in the XLK, which is the S&P Select Spider Fund. Monthly charts are still great, but I'm looking at the weekly and the daily, and they're suggesting we're a little toppy right now. That's all. It needs time, maybe time more than price. I don't know. It might be a combination. In the meantime, back at the ranch, what I'm looking at is TLT. And I said, if the TLT can get to the 125.50s, in other words, it breaks right above the 18th of April, 124.98 high, that's the iShares 20-year Treasury bond ETF. If it can do that, as the market's pulling back, at that point, the VIX index should finally see a decent rally back into the 11s, the high 11s and the low 12s. And at that point, you will start to see selling come in, and you won't get these bounces that hold. There'll be bounces that fail going to lower lows. But in the meantime, the VIX, I think, is now starting to be in play. Doesn't mean to say it's a great trading vehicle, but it does mean to say that it is in play, and you better watch it very closely, because at 10.71, a pullback back to the 10.30 says, buying pressure, don't worry about a thing. Pushing above the high today of 11.17 at any point in the next 2 days says, here we go. Slight decline in those very, very strong sectors that I mentioned, the 3 sectors. Now, question about Facebook, FB, trading. It tried to get 153.35 was the high today. 153.60 is the all-time high. I'm watching this closely because this is exactly where the V-shaped pattern starts to suggest that there's a right shoulder failure pattern. So you can see, as I'm going through these one at a time, I'm suggesting to you that look at them closely. I think the upside is becoming extremely limited for many of these fabulous stocks, and the downside will start to open up. But that all it means is that for Facebook, big deal, 151, retest the 144.42 low of the 17th. What's the big deal? 4 points, 7 points, 8 points, going so quickly to all-time highs. I tell you what the big deal is, because the monthly chart would start to, the weekly chart would start to deteriorate, and then say, wait a minute, that rectangle that you like to always draw with the low, in this case of 144.42, could start to see the gap filled, and then the candle of the 21st of April down to 139 becomes a focal point. So I'm watching these very closely. I'll be back. Basil Chapman. Dow is now down 38. S&P is down 5.60. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, so we want to look at the 10-minute E-mini charts. They made that peak E right arm extension, pulls back really sharply to 24.02s, then it runs up in a single leg A. Now what's going to be very disappointing to the bulls at this particular point is, if I mentioned the den, that if there is another rug pull, the market's not going to like it. It's going to be very disappointed because it's been the exact opposite. Every single pullback has seen buying. So my thinking here is that if the E-mini takes out 24.02 one more time, they won't be buying into the close. They'll be selling into the close. And what you've done is you've usurped the energy of the end of the month buying, and all of a sudden people will just step back and say, well, let's just wait a little bit. Let's not do any more buying. So I'm watching this real closely. And to put it together with the VIX index, the VIX index at this particular point, VIX.X, at 1088, it's kind of holding well. It's a good-looking candle, and the stochastic is, I'd spoken about this when I was doing Larry's show at 9 o'clock to 10, that the VIX in this area very often, might not be immediately, but this is the area where it starts to try to build some upside strength. So we just got to watch that really closely. Within the context of the monthly chart, within the context of the weekly chart, if at any point in the next 3 weeks, there's a move that takes 2 days, it's a weekly chart, in any 2-day consecutive period, if there is a move in the volatility index above 13.50 and it's holding there, watch out, because this candle would suggest there could be an even stronger move to the upside. So everything is in place right now. One of the reasons why we wanted to remain on our bearish side, and although we were going to add some more today, I said, you know what, I'm prepared to wait a day. I don't mind if things turn around. I'd rather at this point get the peaks that I'm looking for so that we could set in place new shorts, appropriate shorts. But I didn't want upside risk of new highs. I would rather I'd rather know where the upside is as a stop or a buy stop. And that's really what we're looking at. All right. So now what we're looking at is, I want you to go through this just to show you. We looked at crude oil. Remember, crude oil is down $1.78, not good looking at all. And why is the XL of the airline index down? This says to me that we're looking at something a little bit more, I wouldn't say odious, but we're looking at something that has the potential to become a deeper correction. If I'm looking at CTAS, which is Cintas, we have no position in this. It's overalls, clothing rentals. I use it more as a kind of a benchmark. It's off its all-time high at 128.85 and 125.08. Big deal, just 3-4 points off its all-time high. And that's peak C. What's really important about this is that there was a double top at 91.30 and 91.38. Back in March and April of 2016. I could have called that a phantom peak. I don't want to. I want to be as strict as possible. But I am watching Cintas, because there's Cintas, which is up 32 cents today. In the next 3 weeks, starts to break 123 support. No, 3 weeks, it'll be 122.50 support. There's just a real good chance that it's going to pull back a little deeper, and together with high-grade copper, it would be suggesting to me that there is some kind of economic slowdown going on. And if you put it into context of my triple yield charts with the white one, the 30-year T-bond yield, the brown is the TNX, the 10-year yield, and the 5-year light blue, I always forget what that's the FVX, 5-year, put it together, they are suggesting that the Fed is... I'm not sure they can raise rates. I think there's an underlying problem that's going on here. We'll see. But in the meantime, the yields are just stuck in a range, making, at this point, it looks like lower lows and lower highs. So keep in mind, last week was a key week for many aspects. This is the follow-up week. So it's like an internal week and an external week. This is the week where I want to see follow through to the downside in the Dow. I want to see if the Dow can hold 20,900, 20,870s. I want to see if there's a turn down in the SMHs, the semiconductor index, the QQQ, and the XLK. When those finally turn down, I think there's going to be a big problem. I think it's going to be that we will see whether or not the Dow, the New York Stock Exchange, and the IWM actually hold up well, the Russell 2000, as the best start to pull back. And now you see this rotational correction. I'm beginning to think that we're going to have a little more time. 13 weeks could go into 14 and 15 weeks of consolidation for the Dow. All right, so that's what we're looking at there. I want to just quickly do the TO, if I'm correct. TU. TU is the... What is it? It's the U.S. Treasury note 2-year continuous contract. And the question was, what about it? Well, it's an A, B, C, D. Yeah, D. So let me just show you something here in the weekly chart. This is the 2-year continuous contract. I hope I'm correct. Yes, I am. A, B, C, D. So it's made a peak D. I'm not yet ready to put the down arrow in because the MACD is still good and stochastics at 73%. But the 2-year yield is suggesting that at 108.07, if it breaks 108 support, it could go quite a bit lower. If it pushes above 108.07, I'm sorry, 108.10, it could go quite a bit higher. And that's the yields. That's just telling us, watch these yields real closely. And if you're looking at this, the 30, the 10, and the 5, you'll see that the distance between the 10 and the 5 is getting closer and closer. 30-year is way up there. So I'm watching. I like to look at the different, the perspective of how narrow the yield is or how it's widening. If you look how close they were back here, that was in 2015. They got real close to making the bottom, and they went up and they expanded. So this is going to be something I watch for a couple of reasons. Here's something else I want to talk about. The iShares Global Timber and Forestry ETF, WOOD, W-O-O-D. That is suggesting that this is probably going to be a leg F. So if I put this together with the copper index, I'm saying, well, this is still very good. The high of 60.77 last week, the week of the 26th, and this week is exactly the same, 60.77. So I'm going to be watching this real closely because this shows the same divergence that we've got in the market, where you've got a couple of sectors that are making all-time highs, and you've got some sectors that are just not doing very well. So you've got the same thing with the implications of the recovery internationally. If copper's not doing all that great, and that might be part of the China thing, wood, the Global Timber and Forestry ETF is very good. So I'm watching these closely, and the HGX, the Philadelphia Housing Index, hasn't yet broken above last week's high of 276.45. Let me just change that, 276.45. So yeah, all of this goes together, and I'm going to be watching it closely, because if the housing sector starts to pull back here, that's not going to be such a good sign. All right, I want to get back to some of the aspects of the market that I was asked about. I did that. Goldman Sachs. See, Goldman Sachs, oh my goodness, down $7 at 211.43. We were looking at this the other day, and I said, the XLF is just not ready. Goldman Sachs is just not ready. Boy, is this not ready? This is not ready. I'll be back. Basil Chapman, Tiger Technicians Hour. We'll be right back with the Dow at Minds.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone, we're back. Dow's down 40, S&P's down almost 7, and we're going to go straight over to Sophia in Tampa. Sophia, how are you?
I am good. Thank you, Basil. Basil, I need your opinion on the LABD, please. I entered a position this morning at the open, and if you could kind of tell me where, what would be a fair stop on that, and then if it does go higher, where would be a good place to add, please?
Okay, so now I've got a couple of things that before I even talk about it, I want to say, first of all, what was the process in your mind that said, I'm going to enter it right at the open?
It was on the retracement on the bar of the day before.
Okay. All right, good. So your focus was on the fact that the IBB, which is the NASDAQ Biotech ETF, was very weak yesterday, and that you thought that the weakness could continue. Therefore, you wanted to trade the LABD, which is the Direction Shares. What's the exact title? DX Daily S&P, it's the S&P Biotech. So this is the BBH. Let me just quickly see the BBH. Yep, there it is. Okay, so LABD. Let's go back. This is the biotech, S&P Select Biotech. It's shorting that particular instrument, and it is the bear 3 times. So it opens this morning at 10.72, spikes up to $11.32, and trading right now at $11. So first of all, congratulations. That was a really good thought-out process, and you got in exactly right. Now, what I wanted to just say to you is, if I look at the IBB, now it's funny because for my subscribers yesterday, I have maybe 20, 22 bullet points every single day in my Trader's Corner. I have a little summation in my Trader's Corner right at the beginning, a paragraph that kind of sums up everything that I spend all my hours and hours doing charts and everything, but that just sums up everything we're looking at. And then I have all the lists of what we're either looking at or we have or we're changing positions or whatever it is. And I always have the IBB, and I had it yesterday. It was at 288 pre-open, and what I said was week again, BIZ, that's the 2-time short IBB, could rally here. Well, we didn't put on a trade, which is a pity, because it had a really sharp pullback yesterday and a follow-through this morning. Now, this is what I wanted to mention. Just for a moment, you've got the daily, the trading vehicle where you've got to grab your profits pretty quickly unless you find that you are trading a trend that is like a swing trade. In other words, could last 3 to 5 sessions. I'm not sure I'd hold something as much as a 3 times long or short more than that unless I was absolutely comfortable. So this is what I'm looking at. The IBB right now is up 20 cents. The BBH, and I don't know if I've updated no, I haven't done the notation for a while. That's an A, B, C. It made a D in the weekly chart, pulling back. Yes. So there's a green candle up 43 cents in the BBH right now. But from everything I'm looking at in the weekly chart, it suggests that even if there's a bounce, it should go lower. That's the weekly. So now let me just ask you a quick question. Are you treating this as a position play that you'd like to hold for a while, or are you prepared to get in and out on a very short-term basis? Because it is a daily trading vehicle.
Correct. I'll be honest with you. I was kind of hoping to be able to hold it at least for maybe another 2 or 3 weeks.
Okay. So now you've got the 3 times. You see, I think that the 2 times works a little bit better for holding it longer. The 3 times should work, but the volatility is much greater. If there's, in other words, you might see your profits diminish really quickly, and then all of a sudden, as you get out, it's back to where it's giving you a big profit because that's how quickly it moves. Mm-hmm. But this is what I'm looking at. I needed to see. If you don't mind, I'm just going to go to the IBB because I've done a little bit more work on that one. I needed to see if the chop trading band between 288 and basically 298 was going to continue, and it's been in this range for a long time. My thinking was that at some point it was going to give it up and it was going to break down. Well, it did that yesterday. Today there's some follow through. Now, the IBB is up 30 cents, and we said that the BBH, which is the S&P Select Biotech, is up a little bit. I think it was, let me just tell you exactly what it's up. It's up 43 cents. So in this particular aspect, if you were to grab profits, you could grab profits now, but then it's a big deal to try to get back in to time it really well. So here's what I'm thinking. I don't know whether you've got enough to split it into 2 pieces. In other words, a half and a half, or 1/3 and 2/3. But
I could do that.
Okay, so my thinking here is, now let's go to your LABD, and that's what we'll talk about. We'll go apples to apples. It's in a leg B in the daily. The weekly chart, the 120-minute chart, looks to me like, let me just check it out. So that's an A, B, C. Either way I counted it, it's A, B, C. Yeah, it should go a little higher. So I would do this at 10.99. I would have a stop in at about 10.90 on some part of the position, just to say, because if you got in at the opening, you still would be making at least a nice percentage profit. Right. And the only reason is we are going to find out if, in fact, there is a pullback in the semiconductors, the high tech, and also in the QQQs, whether there's now all of a sudden a rotation into the biotechs to say, hey, wait a minute, they've pulled back. Now let's see if they can have a decent bounce while the others take a breather. My thinking is, from the action I saw yesterday and the follow-through today, is in fact selling is becoming rife in the biotechs. That's the reason why I think if you're able now, are you prepared to see your profits disappear? That is, at a break-even trade, or maybe make just 2 pennies if that was your stop? That was a question I wanted to ask you.
Correct. I'm prepared to take a 7 cents gain. That would be, I'd be fine with that.
Okay, so now that makes it much easier, and I'll tell you why. From the chart pattern that I'm looking at in the LABD, this is the inverse of the BBHs. This is a leg B, and my eye says that the target of the big candle down from the 13th of April of $11.48 to the next long-legged doji of 11.94. That's kind of my next target on the upside. So sometimes it's tough because you could have a pullback and then get there. That's the reason why I'm saying don't take a loss. I would take the 7 cents. I would make sure. Okay. So now what we're doing is we've got 2 separate pieces. One is you're going to have a stop a little bit lower down than the 11.11 that it's at right now. But does that include your 7? What was the price you entered at? 10.72?
Hold on. No, I entered at, yes, I entered, so at 88, I'm 7 cents.
Okay. All right. So that means we can 90. All right. So we've got a break coming up, and all I wanted to say to you is, look, I would have one part of it as a $10.92 stop, and the other dollar at your 7 cent gain, no matter what happens. And then I'd let it go for a day or two, and I think we should be trying for the 1150s by Friday or Monday.
Okay. Thank you, Basil. Bye-bye.
Thank you so much for calling. Appreciate it. I'll be back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So just let's do this real quickly. You see the 1 minute chart. You have a little bit of a bounce occurring here, making lower lows and lower highs. And in the 2 minute E-mini chart, made a peak E, and the Chapman wave pulls back very sharply. But you've used up your time to the right, and that says, okay, that means you can have a little bit more of a bounce. I'm suspecting that a little later on, 2408 is at 2406.75. 2408 is going to be strong resistance, and we should start to pull back. Today, being the end of the month, it was every opportunity to have a good session and hold much higher. So I'm watching Amazon, Facebook. I'm watching all the nifty stocks that have been on a tear to the upside. Microsoft included. Microsoft, look at this. Microsoft right here, MSFT. And this is a red candle at a potential reversal. So I'm just watching it very closely. There's still internal strength. MACD is good, not great. Stochastics strong at 89%. I'm watching to see if by Monday of next week, the stochastic isn't at 92%, but in fact is at 78% as the 69 support gets taken out and Microsoft is in the 6850s. We're going to be watching this real closely. This is what I'm anticipating. We'll see what happens. So just real quickly, what I wanted to do, wait, let me go back here because I had a question about Pfizer. Let me see, I haven't looked at it for a while. PFE, Pfizer. Oh, nice candle today. I've seen too many of these candles over the last couple of days. Look, telephone, nice candle, but now it's not really, it's sort of following through after coming down very sharply. US Steel, nice candle, but I need to see some follow through. I don't want these one-day pop-ups. So let's just put it this way, that stocks like a Pfizer, what was the question about J&J? These are all tells. These are very important. J&J is a strong stock. We spoke about this about 2 weeks ago, and I said, chop to the side. It is trying to break out, and it had left side, right side price time match. It's 2 days late, but the price time match was with the midpoint that I chose of the little doji candle back in April. Should have been 2 days ago. Instead, it's not. It is breaking and trying to test the 129 round number high. Today's high is 128.80. It's almost there. So J&J is acting well. It's a mix, even within the defensive stocks, there's a mix. A lot of mixing going on with some stocks in the same sector doing well, some are not. So let me just do this before we wrap up. I want to just say that EEM, which had a fabulous move to the upside, has gone to a D right there a few days ago, pulling back, and this is also going to be a tell. The weekly is still very strong in leg C. So this is the iShares Emerging ETF, has gone to that D. Remember, that's the criteria in the Chapman Wave. You like to get to D and then see what happens. But the stochastic at 90% says there's still some internal strength. When this breaks, if 41.18, if it breaks to the upside 42 or more over the next 2 days, that's really good action. If it pulls back, gets into the gap or underneath the gap low of 40.87 made on the 19th of May, that's going to suggest consolidation. 40.52 will be important support for the EEM. And it kind of looks right now that it's getting a little toppy short term. So let's make this real simple. The VIX index will go to the VIX right now. The VIX is trading at 10.78. If by the end of the day the market has another slide to the downside, and there's a good chance that it might still do that, if the VIX is in the anywhere close to 11 or above 11, I would see negative follow through tomorrow. That's what I'm thinking. And that'll be a big sign for us to say, yes, the consolidation continues in the Dow for the 13th week, the S&P for the 13th week, and that the QQQ, the XLK, this is the high-tech sector, or the tech sector, and the SMHs are about to have some kind of a digestive phase. That's kind of my outlook. We'll see what happens. The day is young in this kind of market. Have a great day, everybody, and see you tomorrow. Check out my opening call, front page of TFNN. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.